From the Toronto Star, I'm Raji Mudder, and this matters. It's been said that the best investment on earth is Earth. For most of us, buying a home is the single largest purchase we will make in our lifetime. And for the past 2 decades, Toronto's real estate market can be best described like a rocket that keeps on climbing higher and higher. Of course, like with everything in our society, the COVID-19 pandemic has disrupted the real estate market in a number of ways. This is usually the time of year when the market really starts to heat up, and there were initial signs that it was going to be another busy season for buyers and sellers. Then the virus hit, and while there are still some homes on the market, it's drastically less than what it usually is. To discuss what's happening right now in the real estate market in the GTA, we are joined by John Pasalis, president of Realosophy, a brokerage that takes a data-driven approach to the market. Thank you so much for joining us today.
Good to be here.
So John, traditionally spring is when the market really starts to heat up, but obviously we're dealing with some really extraordinary circumstances. From a big picture point of view, what's happening right now? Has everything ground to a halt?
We're definitely approaching that phase right now in the housing market. I mean, the latest trends for the sales last week are down 73% compared to last year. So, last year we'd have about 2,000 homes selling a week, and now we're just over 500. So buyers are really hitting pause. Sellers are also kind of hitting pause on their searches. So the market's definitely cooling down pretty rapidly.
Let's talk a little bit about how the market has adapted right now, because there are obviously some challenges to, what traditionally has been a very face-to-face business. I believe the use of virtual showrooms has exploded. What are you seeing out there, and what's happening with showings?
Yeah, it's very interesting. I mean, really, since this started about a month ago, the real estate industry has kind of adapted pretty quickly. So there are a number of different things that companies have been doing. So for starters, I mean, most homes that are going on the market now have very, very good and detailed 3D tours of the house so that buyers can really get a sense of the property virtually. And that's what we're seeing. I mean, our showings are down significantly, but our views of 3D tours are up, through the roof, because people are just sitting at home and watching houses. And what's happening is buyers aren't going out looking at 6-7 homes a week. They're looking at one or one every 2 weeks, the ones that they're really interested in. And, the buyers who do come out are very serious. And when they do come out, a lot of agents and sellers, they have a lot of COVID-19 protocols. So they don't allow double bookings for showings. It's only like one group at a time. They have protocols a lot of times that the sellers or buyers need to sign that they don't show any symptoms, they haven't been traveling. So a lot of companies are taking a lot of measures definitely to mitigate risk. Some agents are doing 3D tours without, their clients staying at home. So the market has definitely changed quite a bit.
What about some of the numbers and the data that you're seeing? What are we seeing about price right now? 500 homes were sold last week. That's still a significant number.
It's still a decent volume. And I'd say what we've been seeing up until last week, the homes were still selling pretty quickly. Homes that were priced well were selling close to their market value. But last week, I've been noticing a bigger trend of some homes definitely selling for less than what they're worth. And some people might ask, okay, well, what's the home worth? I mean, the home's worth what comparable homes like it were selling for, a month ago or 2 months ago. And what's happening right now is some of the sellers, or probably a lot of the sellers on the market, are on the market because they need to sell their home because they've already bought something. And if the home they bought is scheduled to complete in the next 3-4 weeks, they're under pressure to sell their home. So some people are definitely taking prices that are well below what they're worth because a sale is better than no sale. Because if they don't sell their home, they're not going to be able to close on the home that they just bought.
I want to get to the people who are kind of stuck in the middle of the process because I feel the most for them. Obviously, this is the biggest purchase of your life and unforeseen circumstances. Let's just start right now, though, what I think people who are out there who are unsure. The obvious advice right now is to wait. Is that correct?
Well, if you don't need to buy a home or if you don't need to sell a home, certainly it's to wait. And similarly, if you don't need to buy a home, you want to wait primarily because it's not really a good time to be going out. Again, real estate was made an essential service by the province, not so that people can rush out and buy homes, more so that people who need to buy and sell can kind of follow through on their transactions. But if you don't need to buy or sell, you should definitely be putting your plans on hold.
Now let's get to the people who can't wait right now. We're talking about people who are probably in the process, have to close. But tell me a little bit about the buyers right now. I mean, one of the things is if they're buying right now, they're obviously very, very serious. Are these speculators?
There definitely are some vulture-like speculative investors out there who are trying to get deals on properties. I mean, I think definitely in times like these, those people are out. I mean, they shouldn't be out, but they are out. But there are a lot of buyers who need a home for the summer for whatever reason. They're moving out of their apartment, they're getting married, they're having a kid or something, like they have some kind of life event and they need a home for the summer. So definitely there are still some of those buyers in the market. But again, like I said, they're very selective about what they're looking at. They're very patient. Because listings are down, there's a lot less to choose from, which is making it a little bit more challenging as well. But there are still serious buyers out there for sure.
What are the other factors right now? One of the things that people have been talking about is Airbnb is being totally crushed right now. There's a bunch of new rental markets on the market. Are some of those people looking to sell their properties as well? Or is that a factor at all right now?
It's interesting. You assume it would be, but we haven't actually seen that in the data. So we track sales data and rental data weekly right now. And in normal markets, you don't need to analyze housing data weekly because things don't change that quickly. But in a very volatile market like we have now, things can change from one week to the next. So you almost need to see what's going on weekly. And when we look at the rental data, it's interesting. Rentals are down quite a bit and new listings for condominiums are down. And that's not to say that there are some buildings that are predominantly Airbnb that have seen a huge increase in sort of, new listings for rentals for long-term periods because they can't rent them on Airbnb anymore. But as a whole, new listings for rentals and for condominiums for sale are down significantly. I think, again, a lot of this is if you don't need to sell right now, don't. It's a tough time to be renting. And a lot of the condo buildings downtown actually aren't even allowing showings because of COVID-19. So if you have a unit in a building that's not allowing showings, there's kind of no point for you to even list it on the MLS, right? So people who need to rent them are maybe listing them on private rental websites and managing the showings themselves, since their concierge might not allow agents to show the unit.
This is a really big question. Do you think this is the thing that finally deflates the Toronto market? It seems to go up and up and up.
It's hard to say. I mean, obviously, there's the potential that it is going to do that. But there's two sides to this coin, right? And I'm not one of these people who likes to predict the future because I just have come to terms with the fact that I can't. At least in the short term, we're seeing, obviously, the government take a lot of measures to keep people in their homes, even if they can't afford them. They're allowing them to defer their mortgages. All of these things are very positive measures and things that weren't happening during the financial crisis, either here or in the U.S. So you didn't have these efforts from governments and banks to kind of help keep some stability. Now, that being said, there are still risks because Canadians are over-leveraged. And even once we get past this 6-month period where banks and governments are allowing homeowners to defer mortgages, a big concern with a lot of economists is how many people are actually going to go back to work when they can. How many of those jobs are still going to be there and how many are not going to be there? And I think this is kind of the bigger risk to our economy. And my instinct is that some of these risks, if we see some downward pressure on prices, I think it's more likely to occur in the 6 to 12 month period as opposed to the next 2 or 3 months. After 6 months is when sort of these mortgage deferrals are probably going to stop, if they have to stop at some point. And it's at that point we're going to see how many people are working. And if we look at how housing markets unwind and slow down and you see downward pressure on prices, typically during recessions when people lose jobs and they can't afford their homes and they need to sell. Hopefully we don't see that economically. I mean, that's obviously not a good thing. We don't want people to have lost jobs, but we have to be kind of prepared for that risk. And certainly when you have a highly leveraged economy and highly leveraged homeowners, a lot of people don't kind of get their jobs back. There's certainly that risk in the future that we might see some downward pressure on prices.
It feels like an incredibly sort of ironic time. Interest rates are really low, but of course, many people's investments have taken a really big hit, particularly first-time buyers. What advice are you giving to people right now?
For sellers, of course, if you don't need to sell, to not sell. It's not a great market to be listing your home in. very similar to buyers. You don't need to buy, don't buy. For the buyers who are still active, we're finding that number one, they're looking for a little bit of value. So they don't want to pay sort of these peak prices that were going on in February. And most of the clients that we talk to, if they have stable jobs, they want to buy a home, they're buying for 10 plus years. They're not, I guess, as worried, even if prices do drop a little bit in the fall or in the future. If you're buying for the long term, that's the kind of best way to mitigate your risk. But again, if you don't need to be jumping into the market, I think that's the bigger issue. Given the health risk and the concerns and the fact that we all should be social distancing and staying home, if you don't need to buy or sell, you should be staying home right now.
There's been talk of some agents and brokerages using COVID-19 legal clauses in some sale arrangements. Have you heard anything about this? And do you have any thoughts on it?
The clauses really just have to deal with situations where a transaction can't close on a particular date as a result of COVID-19. So they're not clauses that allow either party to break the deal. A lot of these COVID-19 clauses are more about extending the closing if, for whatever reason, the closing can't happen on the date that is scheduled for different reasons. Either banks are shut down or land registry offices aren't opening or lawyers aren't transacting or something like that. So I think it's reasonable to have these types of clauses, but they just allow some flexibility on the closing date.
Is there anything more that you think government could be doing, or the banks for that matter, to help people right now?
That's a tough question. The banks have done a lot, allowing deferrals of mortgages. It's interesting because I see all sorts of debates online, and I realize a lot of people feel like they're entitled to it. Obviously, the banks don't have to do that. The banks are allowing people to defer their payments for 6 months. There's a lot of debate about how this is going to unfold and the fact that they're just tacking on the interest onto the mortgage. I don't know. It's a tough question whether banks can and should do more. I think banks are already planning to take a really big hit because a lot of businesses are going to go under. So governments have done a fair bit as well in terms of ensuring that people can kind of get by in the short term. And again, I think the governments are doing more to look at how to support small businesses. I think there are a lot of small businesses that are particularly vulnerable and are not going to make it through the next 3 months. And certainly if there are things that they can do to help some of these businesses that have been shut down for a month and are probably going to be closed for another 3 months, I think that would certainly help stabilize things in the near future, at least.
John, I know you're very focused on Toronto, but are you looking at any sort of trends for Ontario or nationally even that look interesting to you in terms of what's happening?
I haven't looked at specific data for other markets. Because again, a lot of this stuff is you almost need weekly data because the data from March bundles up sort of the first 2 weeks of March where the markets were busy and normal in most cities, and the last 2 weeks where things were a lot slower. And most real estate associations don't post timely statistics with weekly figures. I have been keeping an eye on Vancouver's market. It's also cooling a fair bit. I feel like Toronto is actually cooling a lot more than Vancouver from what I've been looking at. And again, I think every market's going to deal with this a little bit differently. The prairies, of course, have other challenges in their market, and they've had them for a while with the oil industry. But I suspect that we're going to see very similar trends sort of across Canada in terms of this decline in sales, this decline in new listings. And it's hard to say how each market is going to unfold and how they're going to adjust to it. But certainly in markets like Vancouver and Toronto, where house prices were very high and markets were very competitive, we're probably going to see a bigger effect than we will in other markets that weren't quite as hot.
In Toronto, are bidding wars still happening?
Surprisingly, they are. I think people, when they hear this, they think it's crazy. And I don't want to make it sound like that's the norm, but certainly in some neighborhoods and some types of properties that are very desirable, that as soon as they hit on the market, they're priced well. Sellers have very reasonable expectations on price, and it's just a very desirable home. You'll get them. Now, when you get bidding wars in this market, it's not like the bidding wars of even 4-6 weeks ago, where you have 14 people. And usually in situations like that, the home is selling for way more than what it's worth, right? In this market, you might get a bidding war, but you might get 2 or 3 buyers, and they're all paying somewhere close to a very reasonable price range of the home. No one's paying 5 or 10% more than a home's worth in this market. I think people are certainly more cautious. It's just a home that coincidentally 2 or 3 people like at the same time and pretty much are bidding for it. But far fewer agents are listing homes with offer dates. And offer dates are kind of the way agents would try to manufacture bidding war. They list a home at the beginning of the week and say we're taking offers next week. I think far fewer homes are taking that approach, partly because it's so unpredictable what the market's going to be like in a week. And it's just not an overly competitive market. So they're just taking offers pretty much any time. And if 2 or 3 people happen to like the home, then you just end up with a bidding war.
Is it still safe to say that the bulletproof neighborhoods, the really desirable ones in Toronto, are basically functioning close to normal?
Yes and no. I think even the bulletproof neighborhoods, again, if they happen to have some sellers who desperately need to sell, that seller's going to sell a little bit below what they're worth. But as a whole, I'd agree with you. And those are the neighborhoods where houses are still selling very quickly, where you might get bidding wars. These urban downtown neighborhoods where homes were getting 15 and 20 offers a month and a half ago, I'd say are still functioning relatively normal and are still selling relatively quickly, and probably haven't been impacted quite as much as some other pockets of the city, for sure.
So the big question is, I own in the city, are we expecting some kind of a price reset? I mean, you mentioned downward pressure in the months to come. Do you think that that's a possibility?
You have to be prepared for these possibilities. Even though I'm in the real estate industry and we help people buy and sell homes, you can't have your head in the sky and assume prices are going to always go up forever. If you're not concerned about the risk, you're not even keeping an eye on where these risks might be, right? I do a lot of research academically, and the research that I do is really focused on sort of what I'd say are like micro trends in the housing market. When the market crashed in 2017, for example, in the GTA, it wasn't a GTA housing bubble and a GTA crash. The research that I put out showed that this was a low-rise, detached home bubble that was focused on overvaluations in New York region and some of the other 905 regions. And when prices fell, it was sort of these really micro pockets that saw the biggest decline. Detached homes in New York region and the other suburbs. Condos didn't fall, downtown Toronto homes didn't fall. So when we're looking at how the housing market, it's important to remember and think about the fact that it doesn't all move in the same direction. Even if you see in the news house prices are down 10%, well, that can mean a particular type of home or a particular area of the city is down 20%, while some other areas or house types are actually stable. So I think the key thing, if you're looking at buying or selling, is to understand sort of the differences in which areas of the city and which house types are more vulnerable and which ones are actually seeing downward pressure and which aren't. And I think that makes a huge difference. And I think a lot of people just catch the headline, and I think that can often be a little bit misleading.
Is there anything I didn't ask that you think that we should know?
I think the one thing is that when we talk about this idea of buying and selling first, I think it's important to remember that we often have these discussions with homeowners, this idea of should I buy or should I sell first? And every time we kind of walk them through the risks, a lot of people just either ignore them or they focus on the most recent price trends in the market and assume prices will never go down, or that the risk of them going down is unlikely. And I think this is a good example right now that when we look back, we've had these frozen markets. This is the third time in 12 years. It happened in 2008, happened in 2017, it's happening again now. And what a lot of sellers don't realize, or homeowners who decide to buy first and then sell, is that the market can turn on a dime at any time, right? And if it does, the risk isn't, can I sell my home? What if I don't? The risk is that you own one property and you've committed to buy another. And if prices happen to fall during that period and you haven't sold your current home, well, you're exposed to a price decline on 2 homes, not 1. And this is what happened in York Region in 2017, why a lot of people basically lost their entire life savings because they bought a home. And when they tried to sell their home, they couldn't sell it. And then in the span of 3 months, not only did the home that they buy drop 20%, but the home that they live in dropped 20%. And no one can get past that. That's enough to just wipe out your entire life savings and force people to bankruptcy. So, I think this is an important lesson for a lot of people to remember. I mean, if I was ever in a situation where I had to buy or sell first, I would never buy first because to me, it's never worth the risk of losing everything because of bad timing, basically. So I think people who may be buying or selling in the future, I think this is an important time to kind of think about these risks a little bit more clearly so that maybe they just don't expose themselves to that financial risk.
Well, this certainly is one of the most unexpected things of bad timing that we've seen in our lifetimes. John, that was really, really great for us. We really, really appreciate your time today.
My pleasure.
That was John Pasalis, president of Realosophy. That's it for today. Thanks so much for joining us. This Matters is hosted and produced by me, Raju Mudler, Adrian Chung, and Saba Etizaz. Produced and mixed by Sean Pattenden, and our director of programming is JP Foso. Our show theme music is by So Called, and our episode music is by Mike DeAngelis. We want to hear what stories matter to you. Please send us comments, questions, or ideas to thismatters@thestar.ca. Please consider supporting the journalism the Toronto Star newsroom does at thestar.com. And don't forget to subscribe to This Matters on Apple Podcasts, Spotify, or wherever you listen to your favorite podcasts. Let's talk soon.